Welcome. In this video, can Xcn coin be $1? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
There has been a long-standing descending trend structure on the chart, and this trend has served as a significant resistance, suppressing price movements. Such descending trends typically indicate that selling pressure in the market is ongoing and that investors prefer profit-taking. However, with recent developments, this descending trend line has been broken to the upside by the price, which may signal a potential shift in market structure. These types of breakouts often indicate that buyers are beginning to regain control and that the price is starting to challenge levels that previously triggered downward reactions. Breaking this trend is not only about surpassing a technical resistance point, but it also represents crossing a psychological threshold. This descending trend had previously limited upward movements multiple times and allowed sellers to maintain control. Now that the structure has been broken to the upside, it suggests that a new balance may be forming in the market and that buyers are making stronger moves. In technical analysis, such trendline breakouts are often interpreted as a signal of direction change or the beginning of a bullish trend. Moreover, it's highly important not only that the price breaks the trend line, but also that it holds above it. Sometimes the price may appear to break a trend line, but then falls back below it, rendering the breakout invalid. However, if the price continues to stay above the trend line after the breakout, as we are currently observing, this confirms the breakout's strength and reliability. This paints a more optimistic picture for investors. The timing of the breakout should also be noted, as structural changes like this often follow major news events, strong market catalysts, or high-volume transactions. If this breakout was supported by high trading volume, it means investors were aggressively buying at this level, and that's considered a positive signal for continued upward momentum. On the other hand, breakouts without volume should be evaluated more cautiously, as they may be short-term speculative moves. However, in the current scenario, the fact that the price is steadily holding above this level suggests that the uptrend is technically confirmed and based on solid ground. The price breaking above this descending trend line can yield positive outcomes not just in the short term, but also from a medium and long-term perspective. That's because trendline breakouts are often significant technical events where the price redefines its direction. With the break of this trend line, investors may begin to believe that higher highs could form, the market structure may shift in favor of bulls, and previously unreachable resistance levels could become valid targets. From a technical analysis standpoint, the breakout of a descending trend line is often seen as the first signal of a trend reversal. Therefore, the price's behavior around this structure carries significant importance. Additionally, the price action following the breakout may give clues about what lies ahead. For instance, the price may move sideways for a while, pull back slightly, or test the breakout level before initiating a strong upward move. All of these are common patterns in technical analysis, and investors closely monitor such developments. The current bullish momentum may have accelerated after the price broke above this descending trend line. This indicates increased buying pressure, a renewed sense of confidence among investors, and the potential for the price to target higher levels. Especially after such breakouts, previous highs or major resistance levels typically become new targets, and price may quickly advance toward those areas. Any pullbacks during this process should be considered part of a healthy uptrend and not a cause for panic. With the price breaking and holding above this descending trend line, previous resistance levels now become potential targets. This suggests that the psychological threshold has been surpassed, that investors are once again willing to take risks, and that the market direction has shifted upward. Such breakouts can also attract attention from funds, institutional investors, and large players. That's because positions taken at these levels are often perceived as safer, and the renewed upward movement can lead to increased participation. In conclusion, the price breaking the descending trend line to the upside is a highly positive development from a technical standpoint and gives a strong signal that the market direction may be changing. This breakout boosts investor confidence, opens the door to targeting previously unreachable levels, and can trigger a healthier upward trend in the market. Such technical developments should be closely monitored, especially by investors looking for buying opportunities. As long as the price remains above this structure, the bullish outlook remains intact and upward expectations remain technically valid. But we can't base our analysis solely on trend lines. Let's take a look at the other metrics too. Stay tuned.
When we look at the current chart structure, we can clearly observe the formation of an upward channel within a specific time frame. The lower bounds of this channel represent areas where the price has repeatedly found support, while the upper band has acted as a resistance zone from which the price has frequently pulled back. These types of structures provide strong clues in technical analysis. In particular, the midline of such channels is of great importance when analyzing price movements within them. This midline serves as a key reference point for determining short-term price direction. At the moment, the price appears to be moving toward or has possibly touched this midline. Whether the price can break through this midline or not will give us a critical signal about the direction of the price in the near future. If the price crosses this midline with strong volume and maintains its position above it, this indicates that buyers are becoming more active in the market. In such a case, it is highly likely that the price will begin to move toward the upper band of the channel. In scenarios like this, investors typically shape their positions with higher targets in mind. If the geometric structure of this rising channel is accurately analyzed, the distance to the upper band can indicate the potential for a further price increase. In this case, the upper band of the channel aligns approximately with the $1 level. Therefore, if the price surpasses the midline, a rise toward $1 becomes technically feasible. Moreover, ascending channel patterns generally reflect a broader upward trend in the market. That is, the existence of such a structure in itself indicates that the market is more inclined toward positive pricing. Especially if the price continues to create higher lows and higher highs within the channel, this is a clear sign that upward momentum is being sustained. However, what's critical here is how the price behaves within the channel. Unless it maintains its position above the midline, the price may continue to fluctuate between the midline and the lower bound of the channel. But if we start to see closes above the midline, it becomes evident that the upward momentum is gaining strength. Another important factor to consider here is trading volume. That's because a price move that breaks through or surpasses a specific technical level needs to be supported not just by price action, but also by volume. If there is a significant increase in volume as the price crosses the midline, the likelihood of this being a real breakout rather than a fake one becomes much higher. Breakouts without volume are often unsuccessful or turn out to be what we call fakeouts. Therefore, it's crucial for investors to monitor trading volume closely once the midline is broken. If the price breaks through the midline and initiates an upward move, this affects not only the technical structure, but also investor sentiment. Many investors track these key levels, and once the price crosses a significant point, FOMO may trigger further buying. This can increase market liquidity and drive the price up more rapidly. This domino effect can make it easier for the price to reach even higher levels. At that point, the next major resistance will be the upper band of the channel. If that level is also broken with strong buying pressure, the price could move outside of the channel, possibly entering a parabolic upward phase. However, if the price fails to break the midline or gets rejected there, then it may turn back toward the lower end of the channel. For this reason, investors should view the midline not only as a transition point, but also as a potential resistance level. If a rejection occurs at this point, investors should consider the possibility of a pullback toward the channel's lower band. Still, based on the current structure, the price appears to be in a strong upward trend, and its approach to the midline is giving off a positive signal. Accurately interpreting these kinds of structures in technical analysis allows investors to develop healthier strategies. Price movements within channels typically follow certain wave patterns. Methods like Elliott wave analysis can help further break down these movements. For example, if we assume the price is currently in the third wave, this wave is expected to be the strongest and longest. That would make a move toward the $1 target more technically likely once the midline is surpassed. In conclusion, we currently have a rising channel formation, and the price has either approached or touched the channel's midline. If this midline is broken, the technical outlook suggests increased upside potential with a target around the upper band of the channel, approximately the $1 level. As always, such key technical levels should be evaluated alongside volume, indicators, and the broader market context. While uncertainties remain, the current structure is providing positive signals, so if these levels are breached, the probability of further upward movement becomes significantly higher.
MACD is a powerful and effective momentum indicator frequently used in technical analysis. While helping us understand the underlying dynamics of price movements, it provides valuable information about the direction and strength of a trend, especially through the relationships between its lines. In this context, upward movements in MACD lines are generally interpreted as indicators of potential upward price movement. Such upward trends often reflect a shift in investor sentiment toward a more positive outlook and indicate a growing inclination toward buying in the market. MACD consists of two main components: the MACD line, typically the difference between the 12-day EMA and the 26-day EMA, and the signal line, usually a 9-day EMA. The relationship between these two lines shows us the direction of market momentum. If the MACD line starts to move above the signal line and the distance between the two begins to widen, this indicates that positive momentum is strengthening and buyers are becoming increasingly dominant. This significantly increases the likelihood of upward price movement. An upward move in the MACD lines may also reflect a strong reaction in prices recovering from previous lows. These upward moves often signal that investors believe the market has moved past its bottom and that the chances of testing higher levels have increased. Thus, the upward slope of the MACD lines is not just a statistical reflection of past data, but also a projection of investor expectations and positioning. A clear divergence between the lines, that is, the growing gap between the MACD line and the signal line, is often one of the clearest signs that the trend is gaining strength. Such divergences suggest that the price trend may continue not only in the short term, but also in the medium and long term. When this trend is combined with upward reactions from key support levels, it becomes an even stronger and more reliable signal of a bullish move. The MACD histogram also plays a critical role in this process. Since the histogram visually represents the difference between the two lines, growing bars indicate increasing momentum and serve as another confirmation of strengthening buying pressure. Upward growing histogram bars effectively signal to investors that strength is building, encouraging the adoption of more buy-oriented strategies. The upward movement of the MACD lines can also provide early signals of trend reversals, especially when a previously bearish market shows an upward crossover of the MACD lines, followed by a clear divergence. It often indicates that the trend is starting to change and the market may be entering a bullish phase again. These scenarios can create highly favorable opportunities for investors using bottom fishing strategies. Additionally, when the MACD lines cross above the zero line, it signals that the market has entered clearly positive momentum, which may continue. From a broader perspective, upward moving MACD lines are not only a result of technical analysis, but can also imply that fundamental market dynamics are starting to strengthen. In such cases, investors feel more secure from both technical and fundamental standpoints, supporting a healthier overall uptrend. Strong economic data, positive news flows, and institutional investor interest can all support the MACD's upward trend. These combined scenarios provide a foundation for price movements to rise over broader time frames. The rise of the MACD lines often occurs alongside increasing trading volume. Rising volume indicates strong participation behind the move, which helps price increases gain traction. With large investors and institutional players stepping in, the MACD lines may start to climb more steeply, triggering a more aggressive price rally. At this point, the signals provided by the MACD become much more reliable for investors and offer key insights for taking strategic positions. Furthermore, when the MACD gives similar signals across different time frames, such as 1 hour, 4 hour, and daily charts, it strengthens bullish expectations even more. This kind of multi-time frame alignment increases the trend's credibility and consistency. If MACD lines are rising not only in the short term, but also in the medium and long term, investors may start to believe they are at the beginning of a more extended rally. From the perspective of investor psychology, rising MACD lines represent a restoration of confidence in the market and a decrease in fear and uncertainty. These conditions allow investors to make bolder decisions and increase buying pressure in the market. Particularly, investors who had been on the sidelines during previous downturns may begin to re-enter the market when they see such positive MACD signals. This boosts both volume and prices. In conclusion, upward movement in the MACD indicator lines is interpreted as a highly positive development in technical analysis. It generally signals that prices are likely to move toward higher levels. It indicates that momentum is increasing, the market is gaining traction, and the general investor sentiment is shifting toward buying. If this move is supported by other technical indicators, the expectation of a strong upward trend becomes even more likely. Therefore, the upward movement of the MACD lines signals that a significant window of opportunity may be opening for investors. The lines need to move upward.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.